For some people, the vehicle that they drive is more than just transportation. It's a reflection of their personality. Many people spend a lot of time caring for and money customizing their car, truck, or SUV with modifications and accessories to better suit their needs, wants, and most importantly, their style. See, in America, automobiles can be as much a part of our culture as the music proudly blasting from the custom sound systems we will install. Oftentimes, we spend too much money on our vehicles, then additional money customizing, and we need quality insurance to protect our financial interests in what is usually already a poor investment. But hey, we love our cars. But did you know insurance companies have teamed up with auto body and collision repair centers to scam you? That's right. There is a cohesive effort between these two industries to increase their profit margins and protect their profits, even if that means screwing you, their customer. But nobody is talking about this. Now, according to statistics, there are over 280 million cars on the road in the United States alone, with an average of 6 million car accidents, resulting in over 38,000 people losing their lives each year. Automobile insurance is a wonderful product available to protect you from the liabilities associated with these accidental collisions. With the exception of Virginia and New Hampshire, automobile insurance is required by law in all U.S. states for anyone who owns and operates a vehicle on public roads and right-of-ways. Though it is estimated in 2024, approximately 20% of drivers on the road are doing so without the required insurance, creating additional liabilities for insurance companies and additional costs for all law-abiding insured motorists. Like many products, when it comes to shopping for insurance coverage, you have a lot of choices, from selecting which company to the particular insurance coverage, as well as the amounts of coverage and deductibles. There are literally hundreds of companies throughout the United States vying for your business and hard-earned money. Sadly, more and more drivers are left shocked, upset, and oftentimes shortchanged when hit with an unfortunate situation that requires they utilize their insurance. Stay tuned here on the OBSCURIOUS channel as we uncover the facts surrounding the shady business practices of the auto body and collision repair industry that is approved and sponsored by your insurance company. Now let's get into this. The shady practices being deployed by auto body shops and approved by the insurance companies have been going on for years, and they have far-reaching implications affecting more than just the customers that have been involved in an accident. In fact, more and more insurance companies are getting involved in the auto collision repair business to acquire even more control and increase profits. Now let's take a look at some of these far-reaching implications. So you're in the market for a used car. You begin looking for a good deal on that perfect used car, truck, or SUV to buy. You have gone to car dealerships and you spend considerable time searching local classified ads like Facebook Marketplace and Craigslist when you notice something. Most of the vehicles that are catching your attention appear to be at a decent price, but they all have something in common. And this something should be avoided in most cases. But what is it? And why should it be avoided? I think it's safe to say that most of you are familiar with the term totaled when referring to the damage incurred during an auto collision. The preferred term, however, in the industry is a total loss claim. These vehicles are slated for an auto auction to be purchased by people in the auto salvage business. Now, there are two primary businesses that operate in this auto salvage space. The first, known as an auto wrecking business. These companies specialize in buying these totaled vehicles and selling individual parts piece by piece. Once a vehicle has been stripped of all of its valuable parts, these wreckers will crush the remaining structure of the automobile and sell it for scrap metal. For decades, these auto wreckers have been a great option and of tremendous value for the general public in need of auto parts who cannot afford to pay the often absorbent prices that manufacturer dealers charge for OEM parts. But this has all changed. More on this later in the video. The second type of business in this auto salvage industry are the rebuilders. Licensed wholesale car dealers who are often also owners of small auto body and collision repair shops. These people will buy these totaled vehicles with the intention of rebuilding them to good condition, or so they will appear to an unsuspecting buyer. Once these vehicles are repaired, however, they can never be issued a clean title. Repaired vehicles can only obtain a salvage title from the state's Department of Motor Vehicles, or some like to call it a rebuilt title. There are serious limitations to what sort of insurance you can purchase for a salvage title vehicle, and manufacturers will not support any recall or warranty issues on these vehicles, despite the age or mileage. Couple this with not knowing the extent of the original damage nor the quality of the repairs made, and salvage title cars and trucks pose additional risks that clean title vehicles do not. This is why, historically, salvage title vehicles could be purchased for significantly less than the same car with a clean title. But this has also changed. You will now find these cars for sale at dealerships, private parties, and many of them nearly at the same price as a clean title version of the same vehicle. So back to the original question. What do the cars found in these classifieds have in common? And why should you typically avoid these cars? We have just gone over that. Salvage titles. Now, I think we have adequately covered what a salvage title is and why a car will be issued a salvage title. But the bigger question we're trying to answer here is, why do so many cars listed have salvage titles, even late model cars? Because it's a scam, that's why. Because a heavy majority of the people involved in these situations lack the knowledge or financial resources to fight the insurance company. If their car drives perfectly but has sustained damage that is deemed to be a total loss, they are offered to keep their car along with a check for the remaining portion of the claim. This can be an enticing opportunity for many car owners, and the insurance company knows this. While in some cases, this money is actually used to repair the vehicle, in other cases, the vehicle will simply be driven as is until ultimately being sold or traded one day with the damage, often in the hands of a rebuilder, who will then repair the vehicle to sell it for a profit. Either way, this vehicle will bear a salvage title. See, people assume, as they should, that if they are involved in an accident, they are able to take their damaged car to an auto body shop or collision repair facility of their choice and have their car repaired to a like new, or at least to the same condition as prior to the accident. And if you have rental coverage on your policy, have a rental vehicle provided to you to use while the repairs are completed, right? Well, no, not exactly. It is widely known that insurance companies employ shady business practices, but there is a lot more to unpack here, and that's what we are doing in this video. We are going to shed light on the entire system, this $250 billion a year system that is scamming one another, and all at your expense. The auto body and collision repair business is a thriving and extremely profitable industry that takes advantage of this system to fuel a cash machine of sorts by overtly scamming the insurance companies that are scamming you, and doing so with the insurance company's approval, no less. Now, you're probably thinking, how and why would the insurance companies approve this? The answer may be simpler than you think. Because it benefits both of them. And again, this is all at your expense. And here's how they do it. Auto body and collision repair shops have become experts at this process. And it goes something like this. You were involved in an accident. You have your car towed to a well-advertised and seemingly reputable repair facility, typically with multiple locations to choose from. They accept your car from the tow company as well as the invoice for the tow charges. Let's start here. These shops have well-established relationships with most, if not all, of the tow companies in your area, and they allow after-hour access to their storage yards for those after-hour accidents. Mind you, they do not pay market rate for these towing services. They will pay a substantially reduced rate for the tow. However, this reduced rate is not passed on to your insurance company. Rather, they will charge the maximum rate allowed, and you are none the wiser. After all, You are just grateful that that wonderful insurance policy you bought is covering this costly and unexpected expense for you. But it does not end there. They just got your car and they are just getting started. Now, the shop is always busy, or at least that is the claim. Regardless of how busy they truly are or are not, this next step is one of the most profitable for these collision repair shops. They will conveniently be too busy to complete the preliminary estimate quickly. So this is when your car will begin incurring storage fees. Now, it is important to note that these shops typically charge one rate for outdoor storage and another rate for inside the shop storage. But these storage fees oftentimes start around the same price as the nightly rate for a moderate motel or hotel room. Mind you, this is for a single parking space, often in a dirt or gravel yard attached to or adjacent to the repair facility. These storage fees add up fast and again are one of, if not, the most profitable parts of the business. In fact, many body shops today are making more money storing and tearing down vehicles than they do repairing them. Now, let the damage begin. At this point, shops are paid to tear down the vehicle to assess the damage sustained during the collision. Unfortunately, it is all too common for these shops to have their least skilled personnel perform these teardown tasks, and often leading to additional damage to the vehicle. Albeit small, subtle damage that may go unnoticed to most customers, a discriminating owner will certainly notice eventually, assuming repairs are actually performed. If the damage sustained is minimal and the car is fairly new, say 5 years old or newer, it will likely be repaired. Though if repaired, the quality of these repairs are not consistent from one shop to another, and usually not what one would expect from a professional repair facility. Used and aftermarket parts are normally sourced for these repairs. If the damage to your vehicle is moderate or worse, or the car is 5 years old or older, or should you have any custom modifications, you can almost bet that the insurance adjuster will be calling to advise you that your car is a total loss, and then begin pressing you to release the car. This decision is usually made with no regard or communication, and if you question their determination or declare that you wish to get a second opinion from another shop because you feel the estimate is excessive or contains items that you believe were not damaged, you will be told something along the lines of, "It cannot be done." The moment that they determine your car is a total loss, the body shop will throw all removed parts from the teardown process, like bumpers, hoods, suspension components, literally everything removed during the process, into the vehicle with zero regard for causing damage to the interior of that car. This is particularly frustrating considering many people will be offered an option to keep that car, and more often they are still functioning and drivable when they are declared to be a total loss. This process causes more financial loss for a customer who elects to keep their vehicle, either to drive the vehicle damaged or repair themselves. Either way, it will be a salvage title. Regardless, once this determination is made, the storage fees continue to accrue for the repair facility, and the insurance company will begin to pressure you to release the car to them in an effort to stop additional storage fees. This sends the car to a salvage auction. Now, assuming you have rental reimbursement coverage, keep in mind, the coverage is never enough to actually provide a comparable vehicle for the duration of this repair. You will certainly have to come out of pocket should you need a rental car during this process. This situation puts most customers in a bad position and right where the insurance company wants you. Once you learn your car is totaled, often they push this release before any mention of a payout is discussed. When the payout amount is finally brought up, it is always a shockingly low amount that forces the insured to sustain a financial loss that can be in the tens of thousands of dollars. But again, they have you right where they want you. Your car is now gone. It is en route to a salvage auction. The rental coverage is used up, and you will be needing transportation to get your life back to normal. You owe money for your portion of the rental, the deductible amounts of your policy, and these are all due now. It makes arguing seem futile, and it forces many people to accept the insurance company's super low payout for the car that you worked hard to pay for, maintain, and insure. See, there are many layers to this scam, and it is not just the insurance companies scamming, but more often than not, it is the auto body and collision repair centers that are perpetuating the scam. After all, it is the collision repair company that assesses and provides the initial estimate for repairing the damage to the vehicle, benefiting the most and causing this huge increase in what the industry call total loss claims. Now, we know there are accidents every day that do in fact damage vehicles beyond repair, but that's not the problem here. We have already gone over the numbers, and there are far more accidents in a given year than there are collision centers available to repair them. This has created a unique opportunity for these repair facilities to create a new line of income, and it is profitable indeed. See, when a car comes in damaged, these repair professionals know right away if it makes sense for them to repair. In certain cases, it may be the insurance company is particularly difficult to work with. Other times, the actual damage may present unique challenges or liabilities if repaired. Either way, they have learned to take every vehicle in and often provide outlandishly high estimates for the repair. In a sense, this covers them to ensure they make a nice profit on every job that comes through the door. And in more and more cases, this simply pushes the repair cost over the magic threshold, thus causing the total loss claim. Whereas, if the shop was to be more forthright and accurate with their estimate, these vehicles could be repaired and maintain the clean title that's desired. Picture this. You are an auto body shop professional. You have a limited staff to perform the repairs, and you have a wrecked vehicle come in. And this is an unusually difficult type of vehicle to work on or challenging repair needed. Perhaps your schedule is just full and you cannot get it repaired in a timely manner. Maybe you simply don't like working with this particular insurance company. In any case, you take the car in and profit off of the towing in most cases. You're then paid to perform the teardown and inspection to determine the total cost of repair. Now, at this point, let's say you know the car needs $10,000 worth of repairs that you do not want to perform for whatever reason. What would you do? Be honest and forthright and take the undesired job in anyway? Or better yet, provide a quote for, say, $25,000, knowing this will total the vehicle and place it back into your storage area to continue accruing fees. More and more shops are opting for the latter, and this is all at your expense. Now, you may be asking yourself, why would the insurance companies allow this? Aside from the fact that their payout offer will be close to the cost of the repair, they are simply reducing liabilities on that vehicle. The benefit to the insurance company do not stop there. See, let's go back to the two outcomes for the totaled vehicle, and we will now add a third. In the very first example, the owner will retain the car by electing to keep it and register it as a salvage. In option 2, a rebuilder will buy the car at an auction to repair and sell. Either way, the salvage title prevents most quality insurance policies from being obtained for that vehicle. Since liability insurance is required regardless of quality, this increases the insurance company's overall revenue while reducing exposure on these less comprehensive policies. Finally, option 3. Send the car to an auto wrecker, which ultimately is there to supply used parts for repairs of less damaged vehicles around the country. And this saves insurance companies tremendous amounts of money on a large scale. This is why the auto wrecker industry has been taken over by massive corporations like LKQ. Remember, if you are involved in an accident that is relatively minor and the repairs are able to be made, these insurance companies want used parts or aftermarket parts to be sourced for the repair. That's right. When repairing your vehicle with factory parts made by your manufacturer, this usually comes in the way of used parts from the auto wreckers. This has caused the once value-oriented wrecker business to become wildly expensive for parts that are marketed to and purchased by the collision repair shops for insurance repair jobs. The once value that these wreckers offered to the general public are now days gone by. Their prices are now typically just a fraction less than the cost of an OEM or original equipment manufactured part. This has caused a boom in what is called aftermarket part companies, often overseas companies lacking quality and proper fit. Insurance companies have found this to be a great option for their repair jobs. In fact, insurance companies now sell policies to which OEM parts will be spec'd for any repairs, and believe it, they charge a premium for these policies, while you and the insurance company both hope you will never need to use it to begin with. And what about those payout amounts? How can they be so low? After all, you can never actually replace your vehicle for the amount that the insurance company pays. For this, they rely on the fact that most people do not have the knowledge, financial capacity, or the benefit of time on their side to fight these conglomerates. They will provide you with the least valuable vehicles as comps or comparables. If you argue, you will likely be told that you can provide a select number of your own comps, but there will be caveats to this. You cannot use certain classifieds, they must be within a limited mile radius, and they'll usually want proof of a sale, not just the proof of a listing. Now, if your car has low mileage and is in great condition for its age, they will be comparing it to a well-used and much higher mileage vehicle. This system generates huge profits for all industries involved, and all at the expense of the insured customer. There are ways to protect yourself from these predatory practices, and we will be covering this in an upcoming video that you will not want to miss. So be sure to subscribe and hit that notification bell so you will not miss that or any of our other upcoming factually compelling but lesser known true stories and expose videos. And if you have a suggestion for a video topic that needs to be covered, please drop it in the comment section below. And as always, if you enjoyed this video, please hit that like button. It really helps the channel. Until next time, thank you for watching OBSCURIOUS.